Hey everybody, welcome to another edition of the video Biotech Capital Compass video takeaways. After having done probably 5 to 10 of these, I'm still fairly new at it, so bear with me. I try to make as little noise as possible if you're listening on the audio version of this, the audio download, if you do that, so that I'm not umming and ahhing too much. So here we go. So welcome back. I'm your host, Hartaj Singh. Today's episode is all about timing, specifically Biotech's first quarter earnings drag and how that sets up a tactical opportunity for the rest of the year. We have been writing on this on previous newsletters, so if you're a paying subscriber, you can access those. If you're a free subscriber, you can always read the synopsis we have up front. But it's important, I believe, that now we're almost done with actually the first quarter earnings seasons for most of large and mid-cap biotech to really go through this and also think about what happens next. What's the next step? So we look at why May to September tends to favor biotech, how macro noise is distorting sentiment, and what smart investors can do about it. So let's dive in. The first quarter squeeze, that's what we're going to talk about now. Those first quarter earnings. Most of the large caps have now reported, and the takeaway is pretty clear. This is biotech's softest quarter, always has been. Why? And the main reason is patients face insurance deductible resets in January. Biopharma companies often see first quarter inventory drawdowns after year-end channel loading. And this year, IRA pricing reforms and expanded rebates have added even more drag. The IRA, or the Inflation Reduction Act, as it was called, signed into law by President Biden during his term, one component of it was try to decrease the price of various types of drugs. And this is the first year that many of those the rules and regulations put in place around drug pricing reform as part of the IRA are actually going into effect, and you're seeing IRA pricing reform, expanded rebates have adding more drag. Companies like Gilead, Bristol Myers, and Incyte all have flagged gross net pressure and seasonal weakness. They did that in a very smart manner earlier in the year, in the January-February timeframe, so that this should not have been a surprise to a lot of investors there. But here's why that sort of the first quarter earnings weakness matters. The first quarter softness often sets the stage for second quarter strength. As investors process the pain, they begin to pivot, especially as we enter a stretch rich with clinical catalysts. And really our source here is a newsletter we had written called Biotech's Bounce, Green Shoots or Head Fake, April 29th, 2025, Biotech in Focus. Another one we had written April 10th, 2025. So more recent newsletters talking about this. Now let's talk about the May to September momentum. Here's where things get really, really interesting if you're a biotech investor or you're looking to educate yourself in biotech. The May through September window is biotech's version of earnings season for the pipeline. Why? Because of medical conferences. We're talking AACR, ASCO, or ASCO, as a lot of people call it, ADA, EHA, or EHA, as a lot of people call it, ESMO, or ESMO, also, as a lot of people call it. These are all packed into the mid-year stretch. And I really love this way for everyone to think about this. This is biotech's version of the earnings season for the pipeline, for companies' pipelines that are not yet cash flow positive, and even those companies in biotech and biopharma land that have large commercial businesses. But again, this is the earnings season for their pipeline. And the conference season brings a lot of phase 2 and phase 3 readouts. Vast majority of the time, these are what are material to biotech and biopharma company valuations, FDA guidance, and often investor re-engagement. Historically, this is when biotech performance stabilizes, historically, this is when biotech performance stabilizes or even outperforms. Check this out. XBI, the small to mid-cap ETF, tends to bottom in March or April and grind higher through the summer. We've shown this in our newsletter, so you can actually access that if you want to look at the actual numbers and the figures we have there. The IBB and the NBI, the IBB is an ETF, the NBI is the actual index. The large cap measures of biotech performance show more consistent gains from May through September. You add in second quarter earnings in July and August, which are usually biotech's strongest of the year end, and you've got a powerful setup. Here, The source here is our newsletter called The Role of Medical Confidence in Biotech Investing. This was published on March 13th, 2025. So again, let's talk about how that makes an impact going forward. We call that signal to noise. And again, why is the market not caught up? It's because sentiment has been hijacked. Top Bloomberg headlines for biotech are full of fear words. And these are Bloomberg headlines, through Bloomberg itself and through other vendors that it pulls in, all kinds of vendors. But really, the headlines for the last month, 2 months, are just full of fear words: bloodbath, blast, collapse, instead of breakthrough, approval, or data. So what does that tell me? That tells me that institutions, biotech special investors, are still being driven by sentiment, which is fear, maybe even loathing for our sector. From RFK controversies to FDA resignations to tariff threats, macro and political noise have drowned out the science. The result? The XBI is volatile, bouncing around on every headline. The IBB and large cap biotech, more stable, less whipsawed by sentiment. But this tells us something really important. Sentiment is disconnected from the fundamentals. And that dislocation is an opportunity. This is also the topic of another newsletter that we wrote called Biotech at an Inflection Point: Resilience Among Macro Turbulence. This was published on April the 8th, 2025. So what can you do now? Or what should investors be doing, or people who have just interest in biotech? Here are a few practical takeaways. Use first quarter weakness as an entry point. If you're interested in biotech and you'd like to be exposed to it, position for May to September catalysts. Favor clean balance sheets and near-term readouts. Biotech's long-term thesis is still intact. Many biotech specialists, lots of media commentators, lots of venture funds, people who are more long-term oriented have still indicated that aside from near-term sentiment, which is extremely bearish, the long-term fundamentals are still really good. A lot of investors are still allocating monies on a longer-term basis to biotech. And if you're one of those investors or want to be one of those investors, biotech should probably be a natural place for you. So that's it. Thank you for today's episode of the Biotech Capital Compass, the video takeaways. If you enjoyed this breakdown, subscribe to the newsletter, share with your team, or reach out with questions and feedback. Until next time, stay sharp, stay curious, and stay positioned for what's next in biotech. Thanks for listening.